best decisions are made when you take into the consideration of multiple people.
You're listening to the BulkLoads podcast, your number one resource in everything bulk freight trucking. And this is episode 220.
Hey guys, Jared Flynn with the BulkLoads podcast. Got Tyler in here with me.
What's going on?
And fall is in the air.
Yeah, I love the colder weather.
I think everybody in this office loves fall. I mean, is there anyone in here that does not hunt?
I don't think so.
Maybe some of our new girls that actually I haven't asked Sarah or Connie if they do.
Right.
But yeah, I think we've been sharing trail cam pictures and yeah, it's just that this is our favorite time of the year, I think.
Yeah.
If you ask these guys. Real quick tip of the week I want to give to you all. Most of you all know, but if you don't, we have a sister company, Smart Freight Funding. We do quick pay factoring on all receivables through BulkLoads, but even if you're not on BulkLoads. So maybe you're listening to this podcast, you're a subscriber because you like the content that we produce. We do next day quick pay, some as low as like 2%, depending on your situation. And man, we just have a different way that we approach it. So we're not like other factoring companies. We really have a more one-on-one approach. Think of it as a back office support person that we give to you to use. We know that you as owner-operators, drivers out there are busy with the day-to-day, and we allow you to focus on what is making you money and allow us to do the back-end office and support you. We have thousands of companies doing it today. We encourage you to check us out. Man, if you don't like the pain of doing invoicing and tracking invoices and knowing when your money's coming in the mail, let us take that off your lap. I don't like doing that. That's why we've created this company. And again, we help thousands of companies, so encourage you to check that out.
Yeah, and I'll say, with Smart Freight, my favorite thing about Smart Freight is that, our motto is we want to earn your business, not force you to use us. So there's no contracts or anything like that. We don't want to, we don't want you to sign a piece of paper and you have to factor every single load. No, if you can get paid, within a week of, hauling a load, we want you to, take that route. But most in our industry, they're 30 days out with paying. So we're just that extra support piece. That way you can have the cash flow you need.
Absolutely hate contracts.
Yeah, they suck.
I don't know why, but yeah, we don't hold people to them. We want to earn your business. We don't want to force you to do business with. So again, check out smartfreightfunding.com, or you'll see the tab on BulkLoads for quick pay, and we'll be glad to get you set up. Super, super simple process as well. So with that said, speaking of money, today we're going to bring on Jason Tiedke. He is Director of Specialty Finance with American National Bank up in Omaha. They are the bank that we actually use for Smart Freight. We have a partnership with them. It's been a great partnership over the last, I think, 5 or 6 years with Jason. If you're a business owner out there today, well, actually, I think any person on there, you're probably dealing with a bank today.
Yep.
And if you're out there trying to grow your business or trying to strengthen that relationship, this is the podcast for you. I've been asking Jason, I think for the last 6 months, can you come on our podcast and speak just from a banking perspective? Man, money makes the world go round and round, and knowing kind of how to use money as an asset and to use money to grow your business. Man, we know in this industry, it is very capital intensive with owning trucks, trailers, all the accessories that come with that. There's a lot of capital, which takes cash and money to do that. So we're going to bring Jason on today. A lot of these are practical, but a lot of these actually were very interesting. And we're going to probably talk about that more after the podcast of how to, if you're just starting out, kind of the approach to take, even if you've been at it for a while in the business, how do you strengthen that relationship so you can actually grow? We've seen over the past couple of years, the trucking industry, there's been such demand, and have companies been able to keep up with that demand by growing their assets, growing their truck base and all that to keep up and grow their business and be more profitable. So that's what we're going to speak about today. Awesome podcast. I always say this, Tyler, man, there's some of these that I just get excited about. And, we talk about this all the time, man, as we keep doing this show week by week, man, we are creating this ultimate playbook for trucking companies. So I welcome you. Go back and listen to these old podcasts. Like now we're bringing on every aspect of any business, but especially trucking, that you can use this in your tool belt to grow your business. And
Yep.
this is one that, man, I've been waiting to have on and excited for you all to hear. So with that said, here's my conversation with Jason Tiedke of American National Bank. Jason, thanks for coming on.
Thanks for having me on, Jared.
Yeah. Well, just so our audience knows, Jason, we've done business with your bank, American National. Wow, I think we're going on 5 or 6 years.
Yeah, it's been a great 5-year run with Smart Freight.
Yeah. So just want to say thank you for the relationship that we've had. You guys have been tremendous on helping us grow, and we owe just a great deal of gratitude for that. But just for our listeners out there, tell us who you are, who is American National, where are you guys based out of, just kind of high level of kind of where you guys are in the market.
Yeah, you bet. We're actually a local community bank in Omaha, Nebraska. We've got, I believe, 37 locations spread out around Omaha, Nebraska, Council Bluffs, Iowa, a few nearby rural communities. And then in the last several years, we added locations in Minneapolis and the Twin Cities. It's kind of the big picture of American National. We offer full service commercial and consumer banking services. I have basically a history of doing small business lending, leasing. Today, I manage our specialty finance department, which includes transportation financing. We have customers basically in 10 states, most of those somewhat contiguous, obviously, to Nebraska, but most of that transportation financing is in Nebraska, Missouri, Arkansas, and then again, we spread around to several of the contiguous states. Our financing is, company fleets of 10 to even up to 500 trucks, but we have a lot of local owner operators. Some of the owner operators that are out of market, it's more of a consultation with them on how to get started using their local banks and local financing. What's some of the best practices? What is your local bank going to want to see? Our goal being that those owner operators will grow or graduate financing from us, or even if they don't, if they stick with their local bank, having them be successful is good for all of us, and we just enjoy helping them get started using our experience in the industry.
Well, I'm glad you said that, and that's where we're going to go with this conversation, because we talk to so many brand new owner operators. They find BulkLoads because, and quite frankly, Jason, a lot of these guys say, "Hey, I need to show my banker my business plan, or I need to show him, where I'm going to find freight." And we're going to unpack this in a lot of different ways. But I really want this conversation to kind of tail around like good business practices. Hey, if I'm a brand new, I've been a company driver for a while, I want to get into trucking, or over the past couple of years, I've seen trucking is such a hot market. There's such huge opportunity. There's such a demand out there. Hey, I want to take the next steps to look to see, hey, how can I start a trucking business? But we all know this, man, it's very capital intensive. There's a lot of equipment that has to be bought. A lot of that takes, capital and financing. So let's start there, Jason, and really go through, if I'm a brand new, I was a company driver, but I want to start my own trucking business. I got to look at getting financing for a tractor and a trailer. What's the next step I need to take?
Yeah, it's a great question. And I start with a lot of my business owners, whether it's the truck driver or any business, but even for some of the owner operators or people wanting to get into owning their own truck, I tell them one of the things you need to do is you need to have your own team of experts, right? You're sort of like your personal board of directors. And I think, as a matter of fact, on your show, you guys do a good job of bringing a lot of expertise to those people that are looking to get started. You need an insurance experience in the industry. You need someone with advice on navigating the DOT and regulatory issues, costs to get started. You guys had an excellent podcast on that recently. An accountant and a bookkeeper, where are you getting your loads from? And then, your banker, how do you establish a relationship with your local banker? and what is going to make you attractive as a business or as a startup for that local banker. And that's really the key. We get some of these that come in and, they know what they want, but they have a hard time explaining it. And that's common across the board for anybody getting started into a business. You mentioned a business plan. Some people think, well, I got to have a 10-page plan and some fancy charts. That's not what that means. I tell people the most important thing is be prepared, right? So when you walk in and the banker starts asking you questions, you're not a deer in headlights. You kind of have answers and you have an outline for them. Be able to show projected revenue. Can you substantiate that number to the banker, whether it's partially through contracted hauls and supplemented with back hauls? Show that you've done some research and that you can show what the top line revenue will be, and be able to list out your expenses, insurance, fuel and oil per mile. Do you have a repair and maintenance budget, especially if you're getting into a used truck with no warranty? You also want to be able to show that, if you have some idea of what value of truck you're going to purchase, you can go out there, you can use the Google, whatever, find a calculator, plug in some numbers, show that you've got an estimated payment, show that what that truck payment would be with buying say for example, you buy a $110,000 used truck.
Yeah.
You put $10,000 down, you finance a certain amount over 4 years. So you have that number. It's a starting point, right? Show that you've done a little. From there, once you have some of those expenses, if you really want to impress your banker, you want to be able to show them that monthly take home when you get done. Go one step further and show, here's my personal living expenses. And at that point, that's really impressive if there's enough there to cover all of your business expense and your personal expense.
Wow, that's good. I never thought about
that.
Not just showing your business, but even my personal. Like, hey, here's full disclosure. Here's everything I have, or here's my monthly budget from a personal level. Here's my pickup truck, my home, farm, whatever that is.
Absolutely. Those are really key points. If you come in with that, even if it doesn't have to be exact, some estimates, and you have all those things, that's really powerful because it shows you've thought through it. And actually, by doing that on a very high level, you've done one of the most critical components for your banker already. You've said, listen, this cash flows. Now, I also say, if the number's negative, there's some bad news, right? That means you need to determine if you can either increase your revenue or decrease your expenses. The good news is, by knowing that number before you start, you've already saved yourself a headache and possibly some financial difficulty, because you have to be able to not only keep the truck on the road and cover your expenses and repairs and maintenance, but you have to be able to pay yourself and pay your own personal bills. And I tell people, the bottom line is, your primary reason for going through revenue and expense process, it's not to convince your banker to give you the loan. The primary reason is to make sure it makes sense financially for you. If it does, then your banker's probably going to already have a path laid out to be able to do the financing for you. You have to figure out the terms, but this is really about making sure it works. Too many of them get into it and then realize, enough research, they were wrong on some of those expenses or the revenue or what it would take, and that hurts financially.
Yeah. Well, let me back up here. I want to talk just a little bit, and I know the answer to this, but just kind of general good practice rules. Like if you're wanting to start this business and you're looking at, let's just use simple math, but I'm gonna purchase $150,000 truck. Trailer's going to be $50,000, so it's $200,000 in capital. Just that alone. What am I going to have down on that for the bank to loan? And talk just a little bit high level about the process of even like having collateral or having to sign something on your if it's a farm you own or other assets. Can you just give us how that works with the bank?
Yeah, you bet. It's a great question, especially in today, talk about down payment and things like that. As you and a lot of your listeners will already be able to tell you, the price of the equipment has gone up dramatically.
Yeah.
Whether it's the new trucks went way up, and when conversely, when that happens, the used equipment also gets more expensive. One thing that a lot of them will hear today is you need more money down. Typically, we talk to customers depending on the term, right? So if you're on a shorter amortization of unused equipment of say 3 years, maybe you can get by with little to no money down. You'll find in today's environment, a lot of banks are asking for up to as much as, depending on just how much over the normal price that is being asked for that equipment, up to as much as 20% down. Now, what you hope is that there's some flexibility there. If that's 200,000, I may not have 40,000 to put down on that equipment.
Well, yeah, a lot of these people too. I mean, I'm just thinking these, a lot of our guys. I mean, starting off. I mean, small rural towns. They're just getting started. Like, hey, I don't have that much down. I don't have that much cash on hand. But I know there's an opportunity there. Like, how do I get around this, or what are my other options?
Yeah, that's where if you have some options where you have equity or value in other assets, you mentioned in a farm ground or in your house or things like that, it can help you. So maybe, in this particular case, they're asking you to put 10% down, so it's 20,000, and you've got 10 cash, but you've got equity in your house, so that other asset that you can pledge. That's a great way to help you get started, right? You don't always want to rely on those other assets all the time, but it will help you to get started, and hopefully, then keep your amortizations as short as you can. You don't want to get it so short that it makes your payment so big it's unbearable, but you want to try to start building equity in your equipment so that maybe the next time it comes around, you've got enough equity in your current equipment that it supports either the trade for your next new equipment, or that you're going to add a second truck, and now you've got equity in the first one. You can use that to purchase the second one. So, but initially, yes, I think it's always good to go into it with your banker knowing that you may have to put a certain amount down, and today it might be more than normal. Is there a way to compensate for that? Yes, you might have to ask your banker for it. Hopefully, they'll look for those solutions for you proactively.
Nice. Jason, you talk about, you guys are a larger bank. You guys up in the Omaha area, you kind of mentioned locations. But what I found interesting, you said, for our listeners that span from coast to coast, all the way up into Canada on this podcast, you actually recommend using a local bank, or at first. Tell us why. You're on here pitching your own, your own services. Why would you recommend somebody, that's based in Greeley, Colorado, to find a local bank?
One of those things for somebody who's a startup first truck or maybe the second truck, we tell people having a really good relationship with a local banker is key for several reasons. They're probably going to know others in your community that might be able to help you. And they have kind of what I call that tool belt of other areas of expertise. And when you're starting up, as I mentioned earlier at the beginning of this podcast, that kind of having your own board of directors. I have some owner operators and small companies that they've stuck with their local bank, and maybe they use us for some things, and maybe they're using us for their third truck or fourth truck as they start growing, and almost kind of outgrow sometimes what the local bank is willing to do.
Yep.
But initially, that local bank is part of your board of directors. They're there. They know the local environment. They know you, and they might be willing to do terms even that are a little bit more unique. They're more willing to take your local house than maybe we are in Omaha to take a house that's in Mississippi or somewhere in Colorado that's not local to us. They have a distinct advantage to be able to do that and really customize a solution for you.
Yeah.
And we're willing to consult with those owner operators, even though they're not going to do it with us, and kind of give them ideas, because it's good for them. It's good for the industry. And, we like to look at the big picture and say that owner operator today might be, the next company that's got 20 trucks or whatever it might be. So it's not that we won't do the owner operators. It's advantageous for them initially to use a local bank. It's just good business sense.
That's good. This next question, I put that on your shoulder to kind of defend why, and it totally makes sense to use a local bank versus, until you get to that growth spot. This next one, I might be putting my foot in my mouth. with Smart Freight, we provide instant cash flow for a lot of these owner operators that you typically don't have credit lines. We notice a lot of these guys have a hard time, establish credit lines, so we handle that for them. But we also do a lot of back end support, so I want to defend that. But we do hear, especially a lot of these small starting companies, having trouble even establishing a credit line with their bank. Can you explain kind of how those numbers are figured, or how, if I'm needing to get a larger credit line to have more working capital, how do I do that with my bank?
Yeah, it's another great question that, as we haul that load and you have all your expenses and fuel to keep running and operating, and that you may not be getting paid for, 30 or 60 days, and you want a small line of credit. Again, it goes back to how do you present it to your bank? If they're not in the transportation financing or banking side of things, and they're not that familiar with the industry, we'll go in and explain to them, well, listen, I'm hauling for XYZ company. They don't pay me for 60 days. And so I might get to the point where I've got, $10,000 in receivables out to them. Would you loan me up to 75% of that receivable? And that's a common number for banks. It's pretty standard for a bank on accounts receivable financing to fund up to 75%. And on a smaller line of credit of 10 or 20,000, they may not even really want to track it that closely. But showing them that you understand, and that really all you're trying to do is bridge that gap between when you get paid and being able to pay your ongoing expenses for the next loads. Explaining that to them is really what they're looking for. If you can do that, then they know what you're using it for, and they want to see that it revolves, right? Payment comes in, it pays down, you advance back up. And if you can explain that to them on how you're getting paid from your customer, and that their turn is 60 days or 30 days, they can actually back into it, and they can tell you how much you need, right? If your monthly billings are, let's just say it's nice round numbers, 10,000 a month, and they're paying you every 60 days, you're going to have $20,000 in outstanding AR before you start seeing that first check.
Right.
So they know you're going to need a line of credit of, probably 25 or 30,000. So being able to give them those numbers, this is how often they pay. The average is 60 days or 45 days. That information goes a long ways. It's kind of like I said, being prepared and having that information means a lot to the banker, and they know you've done your research, and it goes a long ways towards them approving you.
And I think them also seeing who the counterparty is. Like, hey, this is I'm hauling this load for Tyson Foods. Well, they're a highly reputable, credit-worthy company. Knowing that, or making sure that they know that, hey, these companies I'm hauling for are within good credit standing. But I say that too, just, that's where we've seen a need on our end for Smart Freight. So many of these companies, or some of these truckers, have a hard time getting that credit line, but then also just having to deal with all the back end invoicing that we've been able to package all that together and take that off their lap. I know I personally don't like dealing with paperwork and all that back end stuff. I do that even just today in our businesses. There's a lot of that back end stuff. I scale out and I pay companies to do that because it allows me to focus what I'm good at doing and growing the business and creating and all that. And I think a lot of our carriers, our listeners would almost say the same thing, that, hey, that's not my expertise. Let's contract that out. Or let a third party do that. But that's good to know for those that still want to build that credit limit or build that credit with the bank, those steps to take. Jason, this is kind of off the subject we're going at, but this is just kind of general broad. You hear today, especially with everything going on with the Fed and that capital, or people say cash and money is so easy to get today. Can you give us, is that true or false? And why?
Yeah, I would say that it has been true recently. If you look over the last few years, even through, people thought that during the pandemic, through COVID, that things would really tighten up at the banks. And actually, a lot of businesses did really well. There was good activity throughout the economy, and money was pretty easy to come by. I think what you're seeing now is there's obviously, everybody's talking about inflation and rising interest rates. As we always say, if you're hearing on the news that corporate profits are down, that typically means they're going to start cutting back, whether it's on employees or whatever it might be, right? And that
Yeah.
trickle down starts to happen. And so we've been hearing corporate profits are down. It's been going on for months now, and I think it's trickled down into the general economy. And so I would say things are tightening up a little bit. I think one of our people internally brought this up recently, and it was a really good point. We haven't seen interest rates rising at this pace. For most of us bankers, we haven't seen it in our lifetime. I mean, those that were around doing banking in the late 70s and saw the dramatic rise in rates that led to interest rates that were 18 to 20%. We've been the prime rate, just as an example, it's the most common rate out there, which is a short-term borrowing rate, was at 3.25% for a long time. It's at 5.5% today, and when the Fed gets done, if they go up 75 basis points, you're at 6.25%. If they go up a full 100 basis points, now you're talking 6.5%. That's double what it was literally a year ago. And so if you have a line of credit out there already, your interest expense just doubled. That cost of borrowing short-term money or using a fuel card, those fuel cards are a lot of times tied to a prime rate. The interest cost on those just doubled. And so I think banks will start looking at things a little bit closer. They want to, what we call stress tests, right? If your costs start going up and, whether it's fuel costs or interest costs, all those things are going up. Can your business handle that? Can you adjust your revenue or your billings to your customers? Can you adjust that fast enough to meet the growing increase in expenses? And I think that is starting to cause a little bit of tightening throughout the credit market.
I like what you just said there, that it's a little bit of a stress test on companies to see how they can perform when this happens. Because again, it seems like capital or funding, it's just been so easy. But now that prime's going up and they're tightening this down, how will companies react? And we don't need to get into economics here, but I mean, there's reasons why the Fed's doing this, to almost purposely kind of tighten up the supply, or tighten up the supply chain of money.
Yeah, absolutely. And it becomes even more important when we talk to our customers about making sure that the terms on their equipment loans really make sense, right? As the price of the equipment's gone up, they want to stretch out the amortizations longer, and things like that. And in some cases that makes sense, but you really have to be careful, because how long will those inflated prices be there? And when it comes to trading that truck later, now you're upside down. So it really becomes, don't just always take the first financing offer or terms. Look at it and make sure that it makes sense. If I'm financing, you mentioned earlier on 200,000, if you're financing that amount, for example, on a truck and trailer, and you did it over, let's just say 5 years, that payment is going to be about close to $3,900 a month. The key is, in 2 years, that loan is $125,000. Is that truck and trailer worth that in 2 years? Or, you get down to 3 years later, is it worth, roughly $90,000, which is your balance on that loan? Those are things you want to pay attention to, especially when we've seen such drastic increases in the cost of equipment. Will it hold? And, we don't want people to get in trouble on the backside.
Yeah, makes perfect sense. Well, last question I have for you, and this is more broader and maybe not necessarily banking level, but through your career, you've seen companies start up and grow and get to a point to where even they sell their business. And I can't imagine that's got to be one of the most gratifying things for you to, be a person that has maybe helped finance or give a loan to some small business that grows up and then sells it off for, a lot more money, provides, financial security for their families. Would love to hear kind of just high level, maybe just broadly, what have you seen of like these companies that have done that? What are some just key characteristics that you've noticed, through the years that these companies have done? And I'm just thinking, if I'm out here as a brand new business, I'm just starting off, or I've been in the business for a couple of years, hey, I want to continue to grow. I'm always thinking personally about how do I grow myself and these companies, even new companies? But what are just some of those key characteristics that you've seen over the years that these businesses have done to get that end result?
That's a great question. And I think something I mentioned earlier in terms of kind of having your own personal board of directors.
Mm-hmm.
I'm a big believer in the best decisions are made when you take into the consideration of multiple people. Some will tell you it's the rule of 360, right? You should have the best decisions are made when the group has an IQ of around 360. If most of us average around, let's say, give ourselves credit for being smart enough or 100 IQ, that means it takes 4 people to get to that 360. It doesn't mean every decision you make has to have 4 people, but if you keep that concept in mind and have your own board of directors and you have something that is an insurance type question or a bookkeeping and accounting, that personal board of directors, people that grow their companies and are successful, they utilize the experts around them, and then they focus on the things that they're really good at. Whether, they're really good at operating their own business, but they're not really good at the bookkeeping, the tracking of all the invoices, the financing side, all the regulatory things that go with having that personal board of directors. And then the other part to it is really how they treat their people. As you grow and you're adding people to your staff, you can spend a lot of time and resources, sort of I call the people churn, right? Where people leave and you have to bring new ones in. There's an expense with that. You can't keep everybody you hire, but treating people well goes a long ways. You'll always, some people in your company that have been there for a long time and they have that experience and they have your trust. So I think those are 2 key components: personal board of directors, your tool belt of your own experts that can help you make those decisions when you're growing, and then again, sort of that same thing, just treat people well. It goes a long ways, and certainly easier to keep people than continually having to try to find new ones.
That's awesome. Well said. I think I done a podcast a couple episodes back, but I've hired a personal coach. It's been, I guess, about 18 months, and has just changed my life and this guy, he's been a veteran in the industry. He's built several tech startups. He's been involved in insurance, but like for me, like you just said, to have someone that I can bounce these questions off of, or just when I get in this head fog of like, hey, I don't know what's the best decision here, whether it's an employee decision or finance decision or whatever, to have that sounding board. So I think, at the very minimum, if you can find that board of directors, and Jason didn't say this, but a lot of it, you can find people that you necessarily don't have to pay to do that. Like they can come on board, and maybe it is, could be somebody, if you're starting off within the family or whatever. But I think there are a lot of people out there that are willing to share and give good wisdom if you just ask for it. People, like you said, they want to help other people and help them grow. And then, just a segue off that, like I can't, employees make the company, and how employees are dealt with and treated will, just being a good person, but will have long-term payoffs for the company. So, Jason, I enjoy this. I love doing these podcasts. We've been at it now over 4 years, and I've realized people have told me, it's like, you've created this ultimate playbook for owner operators and business people. Like if you go back and listen, we've gone into every segment of business, and this is the first time we've done it with a bank. So thank you so much for coming on and just sharing that. I love this. I'm super excited for our listeners to go out there. I can't wait to hear the responses that we get from our listeners on this. So man, this one just warms my heart. I hope that people will get as much out of it as I just got out of it. So thank you so much for coming on the show.
Well, thank you, Jared. It's been great. And I've had a chance to listen to a lot of your guys' podcasts, especially while we're traveling to Missouri, Arkansas, and our various 10 states. You guys do a great job of bringing on experts, and certainly, no, you don't need a formal board of directors, but just those people and advisors, and you guys do a great job. I've learned a lot listening to the various podcasts, and thanks for having me on.
Yeah, you bet. Hey, I'll be up there around Christmas time, so hopefully I'll get to see you in Omaha.
That'd be great.
All right, sounds good. Thanks, Jason.
Thank you.
Tyler, wasn't that good?
Yeah, that was a really good show.
I think I never thought about this, especially small business. Like people talk about, you got to have a board of directors,
Yeah.
and a lot of us don't think of that as it's like, well, that's for big corporate companies. But you got to have a sounding board and somebody to kind of have a checks and balances of your operation. And I love how
Yep.
Jason said that. Hey, use your bank as your board of directors. When running your operation.
Yeah, and we get guys every day that, we talk to on the phone who are just getting into the industry, or, they've been in the industry for a while, and they ask us for advice on, how can I grow my company to add, one more truck, or, how do I buy my first truck? And I think this is a great episode. Jason just shares all those tips to get started. But one thing that, I kind of pulled out that you don't really think of is whenever you go to a bank and you're trying to get your business started, you're just in that business mindset. You just want to, show the bank your business expenses and the projected revenue, but you never think about your personal expenses. And Jason said, that you need to be bringing in your personal life as well to show to the bank.
Yeah, it was awesome. I guess what I found shocking at first when Jason said this, he said that, hey, you know, you're better off when you're starting off, deal with your local banker,
Yep.
in your local town, because they're going to know you better than a national bank or someone that's multi-regional. And I was like, I respected him a lot for saying that, to say like, hey, no, call us, we want your business and all that. But he said, when you get to that point where you're at that growth level where your local bank can't cater to those needs, or you're scaling where you need more of a national presence or national bank, hey, then we want to talk to
Yeah.
you. So I love that. So again, if you're listening out there, like make sure, cultivate that relationship with your small local bank at first if you're just starting off. And then if you're at that size where you're scalable and need to look at more options, then go after more of those larger regional banks.
Yeah, and I'd say to bring up Smart Freight again here, that's one of the biggest advantages
Yeah,
that you can use, in your tool belt is using Smart Freight, especially whenever you're just getting
absolutely.
started, because that bank wants to see that cash flow, and they're going to be more likely to work with you and give you that loan if you can prove to them that, hey, I can get paid for this work within 24 hours using Smart Freight.
Yeah.
So I mean that's just another asset.
Yeah, and Jason, they've referred us business to Smart Freight because they know they're not at that point where they can cater those needs, and we can as Smart Freight. So again, yeah, if you're out there right now starting, cash flow is an issue. You're trying to just figure out how to streamline that process. Again, not trying to give you the sales pitch, but talk to us at Smart Freight. You'll see a link on BulkLoads. Tyler's going to drop the link in the episode
Yep.
notes here. You'll get in contact same day with same person. We have awesome customer service. Easy to get set up, man. No contracts, like we said in the very beginning. So definitely check that out.
Yep.
One last note. Again, we mentioned it is fall time. Many of you don't know, but I am a published writer.
Yep.
And I've given Tyler. Do you have both the books that I've
I
done?
do, yeah. And I tell you what, my son, he just turned 2, and he absolutely loves them.
He hasn't ripped the pages out yet.
Nope, he's all about tractors and trucks, and Jared, you did an awesome job with this kid's book. It's just you don't really see many books out there about bulk hauling. I
Yeah.
don't think you see any besides yours. So I mean, it's just really
Well,
cool. It's a good teaching opportunity too.
and that's the whole reason. I'll back up. So, my kids are older now. My youngest is 8, oldest is 13, and I would read to them as much as I could in the evenings. We'd have our story time before bedtime. And I always wanted to find a book more to our industry talking about trucking. And again, there were some out there for, obviously Thomas the Train and some of these others. But I was like, man, I want to find something that's more relational to what we do out there. So started putting together images. I do a little bit of artwork, a passion of mine, and then kind of start putting words and started creating this series of children's books. And again, it's all based upon a character, Semi Sam, and his adventures. And I try to make it really relational to what we're doing. Again, there's more than just grain hauling, but he does grain hauling. And there's just real life. I think you see, like, I even have DOT in there.
Yep.
as a person. Maybe not necessarily the villain, but he conquers different things. So if you are interested in looking at this, if you have littles or maybe grand littles, or a nephew, niece, or something, you're looking for gifts this fall, or especially this Christmas, we have a Christmas series coming out too on Semi Sam. This is a great option. I always love giving gifts that are meaningful to people, ones that they'll actually use. And again, if you're out there and you're a driver and be like, hey, I want to give this because this is what I do and this is more educational, and we want to teach kids more about the industry and educating them on the importance of trucking and supply chain. Again, check out my book, Semi Sam. We have some copies here. If you contact us here in the office, 800-518-9240, we can get you a copy made. Or Tyler, he's going to put the link in the episode notes.
Yep.
We have them on a published website, lulu.com, where you can go on there and with a couple clicks, you can order it, have it shipped right to your house pretty quick.
Yep.
So yeah, thanks for bringing that up, man. We're super excited about that. My goal is on the side to continue to kind of push these books out, again, to be very educational for kids and get more children knowing about trucking and getting them more into the industry.
Right.
So
awesome.
Well, as always, we thank you for listening to the BulkLoads podcast. If you found this is valuable to you, especially in the finance and banking industry, please share this with a friend. Man, we love the support to get this in the hands, especially those people that need it. So thank you very much, and God bless.